Good morning and welcome back to Almus Market Mornings. I think just like all of you, even I want to know what happened on Friday because the day was like any other. Broadly, everyone quite used to RBI's presence around 88.80, and suddenly post lunch, we saw the rupee depreciate, breaking past 88.80 like hot knife through butter. Within a short span of time, the exchange rate jumped to 89.30 with levels in between not even seen. There were no triggers or data as such, at least those which weren't already known, but looks like the absence of central bank which has resulted in this move. Good morning, JK. Answer the million-dollar question for us. What happened on Friday?
Hi, good morning, Swaraj. Uh, Actually, market was waiting for us to complete 1,000 episodes, and then that moved. After that, it moved. Ah, so that's on a lighter note. Yes, like you and most in the market, everyone is blind to the reasons why the rupee moved lower, at least by almost by 1%. In fact, the day earlier on Friday, I had looked a very steady, in fact, slightly stronger rupee actually. And then when it happened, I think very few people noticed, and suddenly there was a big vacuum, illiquidity, and all that 188.80 was taken out. There were some reasons offered, no doubt, you know, like reportedly one more Indian firm has been sanctioned in respect of alleged trading with Iran, and then delay in trade deal with between India and US, but nothing officially seen so far on a confirmed basis. And even if such things were there, I don't think that merited such a large move. So currently, because it happened with RBI stepping out, I can only assume that it is just a change in or a change in the approach, or rather, decision by RBI to let the rupee fall uh, uh, to help the exporters who have been hit by the the sanctions, or rather the higher tariff from US, and possibly because they have also sold a lot of dollars, and this is just keeping some powder dry for a future date, and wanted to see how the where the market finds its level. That said, I think market was rattled by the move, no doubt, because the extent of the move and the timing of the moves were very unexpected. And so now actually the market is now in a very uh, almost like consensus view that it's going towards 90. Buy any dip would probably be the mantra for now. And exporters obviously are not going to be active anymore until we break back below 88.80. If there is, if that can happen only if there is some other uh, unexpected game plan from the central bank. But all said and done, you see, uh, while there is many times a statement that RBI does not target a particular exchange rate, and it's a market determined rate. They are the big players, and their presence or absence makes a huge difference to the market, and that's what happened. And reasons can be any. We do not know. Some reasons may come out later, but the point is, rupee has slid to a new low, and sets up for more fall, a matter of time, and it could be another month too, or it can happen quickly as well. But the sentiment has definitely changed. And what I also see as some negative fallout is it also shakes the confidence of the foreign investors whose inflow we are eagerly awaiting. Now, for last 1 year, we haven't had any meaningful flows, either in FDI or FII, on a net basis. And if the rupee behaves this way, being volatile and one way slide, I think foreigners would also be having second thoughts about infusing fresh money, particularly at a time when they are having other markets where not only is the returns better, but also they're seeing a weakening currency like the Japanese yen or the Korean won, where they have, gains from equities as well as from currency. So that's one collateral effect of this move. Other one is, while RBI and the government are also pushing for rupee to be increasingly used in bilateral trade with India. So that also will receive some jolt because if the rupee is in a one-way slide, why would anyone want to receive payments in Indian rupee if you are an exporter to India? So that is also another point that would so all this is the collateral effect of this move. Yeah. So now in near term, I think any dip would be bought and market will not be surprised if 90 is also seen. But I do expect some smoothing operation, at least a smoothing operations from RBI that can stop it at 89.50 and maybe 89. 30 and 89.10 will be the levels where market will be looking to buy. And let's not forget that overall hedging by importers is not significant, and we have large foreign currency loan liabilities also, which would come into play for hedging if the rupee continues to hold above 89 suddenly. So we're starting the week with this completely different picture this week, and let's see where it goes. On the global markets, of course, we had a very shaky stock market across the globe for most of the week, and that was led by the sector valuation on AI and technology that got somewhat repaired late on Friday, particularly in the US market, when one of the influential members, Mr. Williams, indicated that there's a room for cut near term. So near term meaning market actually interpreting it as a December, and suddenly this is again quite contrary to what the FOMC minutes itself indicated, that there may be less chances of a December rate cut, and even the Fed statement after the meeting also had said the same thing. So based on this, yields fell, and then the stock market recovered quite a bit, ending positively for the day. But then on the week, US markets and other major markets were down, mostly while sector valuations are being quoted as a reason. I think the year-end factor of profit taking is also one of the reasons I see. A week where now we have to look ahead to some key official data from US PPI. We'll have the retail sales. These are numbers we are getting after some gap, and that gives an insight into the consumer behavior, consumption, and perhaps the GDP number also will be out. For India also, we'll have GDP number. This week, expectations are that Q2 growth, that is July-September growth, in the region of around 7.2 to 7.3%. But what the market would be more keen would be two things. One, how the rupee is managed going forward, whether there is a fresh weakening policy by the authorities. Secondly, also, whether the data from the GDP is so important when we are looking at possible negative BOP for second successive year, because we are not having the flow. So that these are the two things in the minds of the traders as we enter the trading this week. But let's see if there is any surprise in store from RBI to counter this almost a one-sided view that rupee is going to weaken much more from here. Thank you.
Thank you, JK. And yes, RBI's presence is so huge that their absence is truly missed, and that's what happened on Friday when rupee went lower by almost 1% against the dollar. Even a day earlier, it was steady, but after breaking 88.80 on Friday, there was a lot of liquidity, and prices just moved higher in a very sudden and random sort of fashion. I think now what needs to be looked at is how the central bank does its smoothing operation to ensure an orderly depreciation of the rupee. That's the thing, and I think overall the mantra is to buy on dips, buy dollar on dips. That's the overall game. Otherwise, on the data front, this week we have the PPI retail sales to look forward to. From the domestic side, also we have the GDP number. We'll have the Q2 growth expected around 7.2, 7.3%. So that's something to look out for. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh number of updates.